Welcome back to today's More Report analysis videos on Wednesday 21st of December with me, Richard Perry, market analyst at Antec Markets, looking at Eurodollar now. And we are sort of consolidating slightly, I think you would argue. Two bear candles in a row, doesn't look great, does it? But again, today, mildly higher. So it sort of hit just below that 103.65 level. 103.50 was yesterday's low and then bounced slightly. When I say bounced sort of 70 ticks and then just drifting off again. It's sort of consolidating. I think it's just going to continue to go lower. I think all these momentum indicators, RSI, stochastics and MACD lines all suggest further downside potential, and it doesn't really suggest that there's any real sort of buying pressure coming through. I think 103.50 is the lowest since 2003, and I think that parity is very much still on. Any rallies I think are a chance to sell. 104.50 up towards 105.40, basically a sell zone, and I think that that's going to continue. Now here you can see the hourly chart where again we've had another lower high at 104.80, and just generally speaking, negatively configured momentum. Look at the RSI tailing off at 60 again, MACD lines tailing off at neutral, stochastics crossing over, giving a sell signal again. So it's just putting pressure. I think 103.80 you could argue minor support today, but 103.50 is ultimately the support, and I think it's going to get retested. I'm not saying it's going to go to parity immediately, but I think it will be going to parity at some stage in the coming days and weeks. So I wish you good luck in your trading today on Euro, and I will speak to you later. Thank you.